Mentioned earlier on that we've got these end of month flows and all sorts of weird and wonderful things happen, particularly in the forex market, and it's just a fantastic example actually on cable. Cable is one that I've been looking around on the and at the forex space, and cable. It's I mean it's the British pound is a great currency to trade in all the pairs. We know some of the cross pairs do produce some very nice trends and some very nice moves, and triple figure moves. I'm talking 80, 90, 100 pips plus, as it were, and that's not it's not uncommon. And what with all the hoo-ha that we've had with Brexit as well, it has it's delivered on more than one occasion. But just to give you an idea, when I said about around the London fix, which is 4 o'clock our time. Now I haven't got a local timestamp on MT45. You'll find the same. Mine is, whatever the time is that it's showing on here. For example, this is 1500. That's actually 2 hours before. So that's 15. That's 1 o'clock our time. But you can see here that it started to move higher. Then you have this this very wide volatility candle. But just look at the candles before. We had the break from the volume point of control, which is great. You think great, supported by volume. Then you had this candle here, and it's a huge wick to the top of the candle. And from purely a price-based perspective, you would think, oh right, okay, well there's a bit of weakness coming in, which you get, and it falls back. We don't often talk about our little trend dot here. This is this little indicator here, which is actually a really clever little indicator. It's probably the indicator that is it is closest to the market. The one that is actually in the market is the volatility indicator, because that actually triggers in real time. But the little trend dot is it's got a very clever, neat little algorithm in it. Those of you who come along regularly will know that it's a fantastic indicator to use, particularly on the Renko, because it can really help with entries along with the trend monitor. But on time chart, it also it'll move around depending on the price action. At the close of this candle, it's ended up at the bottom of the candle, which is good because it actually tells us that there is upward momentum in this move. There is, as I said, there's a lot of volume underneath it, but there was a bit of a selling off in there as well. Then you have this candle, and it's a really big candle. That is around the time of the London fix, and this is what you get. This is actually the hourly chart. I've actually gone up to the hourly chart to take out because there's usually pandemonium going on in the faster charts. And you have not only you have a very wide-ranging candle because it triggered the volatility. The volatility trigger indicator is triggered when the spread of this candle is outside of its average true range for this time frame. If you look back over here, you can see that when I say that this pair it will deliver, but it can also be volatile. We had one triggered there, then we had one there as well. And then we had a bit of sideways, but that actually managed to push the price higher, and the trend dots are still beneath the price action. It's still underneath this, although we've got a little bit of a pullback here. Well, we know why we've got a little bit of a pullback, because if we go to a faster time frame, where are we here? Let's go down to the 10-minute chart, and this is where you always have to bring in this other very important element, which is part of VPA, and it's part of classical technical analysis anyway, and that is support and resistance. I mentioned last time how you determine support and resistance on your charts is up to you. Obviously, if you have our indicators, we do that for you because we have the dedicated indicators. We have support and resistance indicators for MT45. We have what we call the accumulation and distribution for Ninja, but we also have this other indicator, which is the camarilla. And I know our traders, certainly on the Forex program, they do use it. They use it in a number of different ways, not only to highlight these very important areas, but they are also potential price objectives for any particular move. And when the price gets there, what it also tells us is that it's likely to pause. there is a hierarchy to these levels. The fourth level, the R4 and the S4, are probably the most important in this indicator. We've actually added two more, a 5 and a 6. What happens around the R4 is basically the price will arrive there. It will generally, as it does here, it will pause, as we have seen here, and as we can see on the hourly chart. Now, what we've done with the indicator as well is these levels refresh every 24 hours for all time frames up to, but not including, the hourly chart. So if you're on the hourly chart and you say, well, as we saw here, let's go back to the time chart, this other chart here, we've suddenly had this sort of pause here, and you look at it, you think, well, okay, there's a bit of congestion and resistance over there, but why has it suddenly stopped at this particular level? Well, by going down to the faster time frame, as I've got here on the 10-minute chart, is because you've hit this significant level. Does it mean that that's going to reverse from there? Well, the R4 is the objective of the R4 from a price point of view, is price will really want to get through that level. Traders see, those traders who use camarilla as part of their trading tactics will see the R4, that what they're looking for all the time is to push against the R4 and to push through it, because a push through and way is often considered a legitimate breakout, as it were. Well, we know a legitimate breakout also has to be validated by volume, but what happens is you will get repeated tests of the R4. You then may, when you do get a break, you will often get a retest. So the level itself, you can use it as a potential, if you're in a trade and it gets to the R4 and you know it's probably going to come to a halt, you could use it as a potential exit. So it's as a target, as it were. You could also use it if it goes through and it looks like it's going to carry on through. You could use it for where you place your stop loss, which is obviously below it. So you can use these levels in a number of different ways. It depends where you are getting in. Someone asked me to describe what the market was like, and the only way I can describe the market, it's like an endlessly rotating carousel. But it's a carousel that moves at different speeds at different times of the trading day. At times it moves very, very fast, which is why we have a tick speedometer to tell us that it's moving very fast. At other times it's very slow, but it never stops. And I know a carousel is going round in a constant circle. The price action goes up, oscillates, as it were, but it's to give you a sense that it never stops. What you have to do is what you're constantly doing, what we're constantly doing, is we're jumping on and off, on and off. So, as I said, how we determine where we are in the movement, in this move, in this continuum, as it were, we look at the price action, we look at levels, and what we then look at is the volume to validate any move. And it's fascinating when you have an indicator such as the camarilla, just to watch it. If you, what we always sometimes suggest to new traders is just watch the charts. Look at what price action is doing when it approaches these key levels. Now, when I mentioned about this indicator, so that's the R4 and the 10 minutes, but above if you put the hourly version of this indicator on this chart, you will see the levels are at a very different place on the chart. That's because the indicator is configured so that for time frames of an hour and above, up to the daily, the levels are refreshed on a weekly basis. So not only do you have levels that are refreshed on a 24-hour basis, you also get them sort of levels that you can work to for the whole of the week. Now, interestingly, when I said about the R4 and how when price goes up, because we had a volatility candle go through here, it actually pushed it through with lots and lots of volume underneath it. But look at what happened on the two previous candles. Well, you can look all the way back, actually. You see the number of times it actually got to the R4, pulled back. As I said, this level has been here for the whole of this week and won't refresh until the session starts again next week. So it touched it there, pull back. It's sort of trading in a range. Then it had another effort to rise there, and it pulled back again. And then you come to the London fix when all sorts of things happen. There's lots of flows going in and out and a lot of momentum. It then touched it again, pulled back, had another go, pulled back under the R4, but this candle actually took it through. Where is this price going next? Well, this is the next logical stopping point, which is 23.56. If we look over here to the left of the chart, it's a natural stopping point because we have a resistance point there, and obviously at some point, let me just zoom out of this a little bit. So let's see, here we are. We can see the level of these of the resistance. We've got this 2 candle reversal here. Obviously the price came off there. How you play when the price gets to this level here really depends. Obviously, if you've got the CSI, there could be a potential for a reversal trade. Maybe, I'm not sure about tonight because we're going into a very quiet part of the trading day, and also it would depend what happens overnight in Asia. So it's a case of establishing where you are in this continuum that the market is in terms of price action. It moves at different speeds. That will partly depend on the session, the time of, and obviously the time of day, because that dictates the participation level of the market. And then we look at levels. So when you come to your trade, you will always have missed a trade somewhere. And one of the things you have to get your head around is basically, okay, what's gone is gone. I've got the narrative in front of me. I can see where my levels are. I can see what has happened. Now I want to know what is likely to happen next, and also find a potential entry point, particularly if the move has been going in one direction and it looks like it is possibly going to carry on. And a lot of people will say, well, that's your chasing price. What you're doing is, you don't want, it's the fear of missing out of the move in the direction that it's going. At the moment, this is going higher. But that's not the case, because what you're doing is you're not just going to jump in willy-nilly. You're not going to jump in at an arbitrary point in the price action. What you're going to do is you're going to wait. You're going to wait for a period of a congestion phase. Some people say you wait for a pullback. I prefer to say after a move, everything congests, everything pauses, and the stronger the move, the longer that pause point is going to be. And we had a great example of that. I think it was yesterday and actually the day before on the CAD yen detail. You can read about my analysis of that on my Forex page at Facebook. And in fact, it was a huge move in CAD yen, a really strong move, actually highlighted by one of our students in the VPA room, which I was very grateful for. It's not one that I spotted myself. And we'll have a look at that chart in a second, but when you look at the chart and you look at the extent of the move, after such a move, everything has to calm down. The market has to recalibrate, has to think, right, am I going to go further or am I actually going to reverse? Looking at the Renko chart for the cable and this particular move at the moment, as we can see, we know it's at the R4. What we expect is a period of consolidation, some sideways movement. The R4 is significant. If it's going to break higher, all things being equal, and you feel confident in taking the trade beyond this move here, but don't forget that it can have the habit of coming back and retesting. But that doesn't matter, because you know where your stop loss is going to be. It's going to be below the R4. You should have a degree of confidence. Now, those of you who have our other indicators, as I said, the specialist ones, particularly with the CSI, you will have the extra confidence, if you like, because the CSI will also help you say, is it going to be a reversal or is it just a minor pullback and we are going to carry on higher? And the other thing, of course, that you'll be looking at again, if you've done the program, and you will know this from the module on technical analysis, which is a very deep dive and forensic look at volume price analysis, you will learn to know the difference between whether a secondary trend is just that, a secondary trend, a pullback. You'll be able to read that, and in fact you are going to get a continuation of the primary trend. And that's what we're actually looking at here. We're actually trying to decide, basically we have to try and establish whether this is the primary trend higher. We've obviously had some pullbacks, clearly we have. What we have to decide is whether this primary trend is going to continue higher, or whether we are going to get a reversal. But looking at the hourly chart, we know why that's paused here. It's paused at this level, and we may get a little bit of congestion. We wait until that congestion is over, and then we make a decision. And what we also have is the volume point of control. At the moment, this is down here at 23.20. If this continues to congest, this is also a dynamic indicator. In other words, it carries on in this range because it can't push through that R4. That will move higher. If it moves higher, it gives us another sense that this is an important level. It's the fulcrum, and you know, we just have to be patient and wait to see whether it does in fact continue in the direction of the primary trend, which we have here also on the hourly chart when it moved up from the volume point of control. What would be really a positive, if you like, for this to continue higher is we really want to see the VPOC move from here up to here, which it may do, because as we can see, if you look at the histogram, that's this is the amount of this is the volume point of control, is volume, price and time. It's not only just a price based, but it's also volume based. So if that moves up to there, that gives us more confidence that this is likely to move higher. Where's it going to go to? Well, we know that because we've looked already. Let's move that up to, that's the 10-minute. Let's look at the hour. That's going to go, that's where it's heading to, certainly in the short term. So combination of price action, volume, support and resistance, but the support and resistance, looking at it through the prism of the camarilla in particular. So David, anything else?